All right, hello crypto community. Jeff Kerdakis streaming here from Bali, Indonesia for the Crypto Week in Review. First off, I want to give a huge thanks to the guys at the Big Crypto Podcast, Sasha and Clady, good buddies of mine, that let me use in this awesome studio space right now. If you've watched the other week in reviews, the previous week in reviews, it's been windswept with microphones or like little earphones, and it's been a nightmare. So super grateful for these guys to have lent me their studio space for this stream. And if you haven't checked it out, Big Crypto Podcast, you can find them on YouTube, Twitter, and I'm sure a host of other social media platforms. I'll post the links to their stuff below. So let's dive right into it. The Crypto Week in Review is designed to save you time and energy. The whole idea here is to give you a quick glance at the most important news of the week so that we can provide you insights into what to expect moving forwards in the crypto space and how to best position yourself looking forward into the future. So before we dive into things, first of all, I want to congrats our contest winner, Mark Travers. He won himself $250 of Uptrend 1UP tokens in the Bitcoin price prediction contest. So what we do every week, we run a contest to see who can guess the price of Bitcoin the following Sunday at 1 a.m. UTC time. Mark was the closest, and there were not a lot of guesses around Mark's guess at all. A lot of people were guessing a pretty flatline and stable BTC price, but if you've been in crypto the last week, you know we have seen a massive pump and then a massive dump, and we're going to get into talking about that real soon. So with that being said, if you want to win yourself $250 of Uptrend 1UP tokens, post your guess what Bitcoin will be, the price in US dollars 1 week from now, Sunday, 1 a.m. UTC time, on the Uptrend comments, and the closest one, Price is Right rules, is going to win it. All right, so let's dive into it. Price action wise, this week has been incredibly bullish and then incredibly bearish. There was a rise with Bitcoin going from $3,600 all the way to $4,200. And if you listen back to last week's episode, we talked about a weekly MACD indicator being super close to a bullish crossover. And this MACD indicator had the most momentum that we had seen since back in October 2016, when Bitcoin took a run from, I believe, $1,000 all the way up to $20,000. Needless to say, we crossed over that MACD and we are on our way up in a big way. But then, as we all saw, we hit a peak, and within, I believe, 10 minutes, we saw a dump of around $500 in the price of Bitcoin almost instantly. A lot of people screaming manipulation. Of course, no one was screaming manipulation on the way up, and I always find that's super interesting for sure. All right, so if you're watching, we're going to dive into the topics that we're going to be covering during this episode. So if you are watching on Uptrend, you can scroll below this video and you'll be able to see the timestamps for when I'm talking about these certain topics. So if certain topics are more of interest to you and you want to dive in, just skip ahead to that timestamp. Or if you just want to get right ahead into the price action, you can skip right ahead to that. So this is kind of like a choose your own adventure, Bandersnatch style Crypto Week in Review. All right, so the things that we're going to be covering in this video. First of all, we had an amazing week in cryptocurrency, not just with the influx of price, but also in terms of adoption of news. And so first of all, we had Samsung. They announced their flagship S10 phone will have a built-in cryptocurrency wallet supporting both Ethereum and Bitcoin. And next up, Elon Musk and the founder of Twitter, Jack Dorsey, both gave their endorsements for cryptocurrency. Then Jack Dorsey tweets about tippin, which is the Bitcoin Lightning Network browser extension used for tipping Bitcoin over Twitter, and he simultaneously opened his own tippin to receive Bitcoin Lightning Network transaction tips as well. Next up, this one's really interesting, and on the same note of the Bitcoin Lightning Network, Fidelity becomes the 229th, I believe, torchbearer of the Lightning Torch. And the Lightning Torch has been something that's been passed around from person to person, and Fidelity has become the first institution to bear the Lightning Torch. We're going to dive into what that means and what the torch is. Next up, My Ether wallet is now allowing for a KYC-free fiat withdrawal. So you can now withdraw cash free of having to upload your identification onto exchanges. So this is fantastic because so many things have become centralized lately. And finally, before we talk about the price action, we'll talk about Binance decentralized exchange is finally live in testing. However, they have some shady news or drama that has overshadowed this launch. So we will dive into that. And of course, to polish it off, everybody's favorite, the price action. There's this meme online. Let me see if I'll probably pull it up on the screen here. And it's understanding Bitcoin and whatever the other one's going to be. It's like price predictions. And I feel this is a pretty common trend for people. Everyone's really interested in the price action, but you know, it's these week in review videos and I feel that are really kind of highlighting what the real substance is happening in the cryptocurrency space. You know, technical analysis, congratulations, but it's only half of as important as fundamental analysis. If we have a strong product, well, then the charts are really irrelevant in the long term. You know, price action going up, down, short term, it doesn't matter really. If you have a project or product that's scalable for the long term, that's what's important. And that's what has bred so many holders out in the space. It's because they think, you know what, I'm just going to stay out of this trading game. I know what Bitcoin is capable of. I know what blockchain is capable of and how it's an inevitable and logical transition in our digital world. So I'm going to stick this out. And that is fundamental trading, or, you know, long-term investing. So let's dive right into it. First one, Samsung has announced their flagship phone, which is the S10. It will have a built-in cryptocurrency wallet. So Samsung, on average, this is massive, they sell over 30 to 50 million units every time they release a flagship phone. And so now with this release, we're going to have about 30 to 50 million people exposed to a cryptocurrency wallet. This wallet is going to be supporting Bitcoin, it'll support Ethereum, and it will be a hot wallet. So you'll actually be able to transact the cryptocurrency more or less instantaneously. Of course, you have, you know, the transaction times and all that, but you'll be able to interact with it. So this seems, or this is a much better solution to store your cryptocurrency than, say, on an exchange. You know, we had Quadriga not that long ago. Quadriga, their CEO, their founder, died. He was the only one holding the private keys. And what happened to everybody? They all lost their crypto because it was in the hands of the holder. These centralized exchanges, people think, or a misconception is cryptocurrency is as a whole decentralized, and this isn't true. Most exchanges are centralized, meaning that if their system fails, as a user, you're on the hook. So what the Samsung wallet is doing is actually allowing you to hold your key. On the centralized exchanges, you do not hold your key. So if something happens, like the founder dies or a hack happens, you lose your funds. Samsung wallet, it's your private key, so you are safe, and that is your cryptocurrency. So a big thought that a lot of people have is, okay, so what does this then mean for, you know, the Ledger or the Trezor hardware wallets? Is this big competition for them? Will they get put out of business? And the answer is 100% not. The Samsung S10 hot wallet is a hot wallet, which means it is less secure because it's always connected to the internet. Ledgers, Trezors, they are offline at all times until you plug them in, and then even then they send your password encrypted. So they are an infinitely safer solution than the Samsung cryptocurrency wallet, but the Samsung wallet is a step above crypto exchanges. So everything is just kind of, I guess you could say, tiered security and safety. And the whole question that you have to subjectively ask yourself is, where do I draw the line on security versus convenience? You know, let's say whether it's the Samsung hot wallet or Ethos, which you can install on mobile, you know, you can send and receive cryptocurrency very, very easily. Is it as secure as the Ledger or Trezor? That's certainly debatable. So, and in my opinion, it's not at all. So, but with a Ledger, you know, you have to carry this device around and plug it into your computer, and that's kind of a hassle. So, you know, some people think, you know, I'll compromise a little bit of my security and keep it on my phone just so that it's convenient. Or, you know, a lot of people do the hybrid, including myself, where they store the majority on a Ledger and then they use their mobile device for, you know, everyday transactions. I know not a lot of people are using cryptocurrency for everyday transactions yet. I know it's more common in my life, but that will continue to evolve and grow. So moving on now, Elon Musk said that he sees Bitcoin as a quite brilliant structure. And I quote from Elon Musk now, cryptocurrency, or he says it, in referring to cryptocurrency, bypasses currency controls. Paper money is going away, and crypto is a far better way to transfer value than a piece of paper, that's for sure. So this has been, there's been a big push for Elon Musk to start integrating cryptocurrency with Tesla, you know, for him to start accepting Bitcoin payments, or, you know, Tesla integrating with the machine-to-machine economy, Internet of Things. You know, IOTA would be potentially a perfect use case or partner with Tesla. But he's commented on Bitcoin saying that the network is just, you know, really slow, energy intensive, a little bit, not necessarily clunky, but just not optimized to the level it needs to be right now. So Elon Musk, supporter of cryptocurrency, advocate for cryptocurrency, but he's not, maybe it's a lot more talk than it is action at this stage. So a lot of people are really looking forward and hoping that Elon Musk hops on the cryptocurrency train in more of an active role rather than, you know, just passive support. In terms of other bigwigs hopping on the crypto train in the last week, Twitter CEO Jack Dorsey showed massive support for cryptocurrency, stating that Bitcoin will likely gain mass adoption worldwide by becoming the internet's single native currency. And so to quote Jack Dorsey here, I believe the internet will have a native currency, and I don't know if it is Bitcoin. I think Bitcoin will be, given all the tests it's been through and the principles behind it and how it was created. It was something that was born of the internet, that was developed on the internet, that was tested of the internet. It is of the internet. And this to me makes a lot of sense. Bitcoin is an ecosystem in a digital age. It's not interacting with these tangible assets or like hard, you know, things that you can hold in your hand. And I feel like we're seeing a really massive movement towards digital assets. We look at Fortnite, one of the world's largest video games right now. You know, they're selling skins, they're selling, you know, like clothes for characters, they're selling dance moves. We're looking at Decentraland, they're selling virtual land. Every, you know, video game monetization has been around for a very, very long time, no question about that. But there's also no question that it's becoming exponentially larger in its adoption and how much money is being fueled into this. And fiat currency is incredibly ineffective for dealing with these digital forms of exchange. You know, you have upload fees, credit card payment processor fees, exchange fees. If you're sending any kind of large amount of money, you got 4 to 5 business day waits, and it's going to cost you $40 for a wire transfer. Sometimes they lose the money. Happened to a good friend of mine, $10,000. They just lost it. They have nowhere to account for it. So Bitcoin, traceable, trackable, it can't be duplicated, more secure, lower fees, and faster transaction times, especially with the implementation of the Lightning Network as of recently. And so speaking of the Lightning Network, we'll hop into the next section where Jack Dorsey, he also tweeted about tippin, which is a Lightning Network add-on for Twitter. So tippin was developed by Sergio Abril. And so what tippin does is it adds a little lightning symbol. It's a browser extension. And so you download this browser extension. I believe it works on Chrome and Firefox. And once you download it, it'll put a little lightning symbol next to, you know, maybe it's the retweet button. It's on the far right. And so you click that lightning symbol and you're able to then tip users on Twitter for their tweets. And these transactions go through extremely fast. They take only seconds. And it's an absolutely fantastic way to kind of get in front, just a little more usability. You know, there's already been tip bots on Reddit. I believe there might even already be one on Twitter. Correct me if I'm wrong. But this is just a really cool thing. And so tippin is one thing that's been happening with the Lightning Network, and we're going to be diving in to other things that have been happening with the Lightning Network in the last week. It's actually been, I'd say that, like, if I had to brand this week, this was Lightning Network week, 100% through and through. So before I dive into more, just going to give a quick overview on what is the Lightning Network for those of you who don't know. And again, if you already know, you can scroll down on Uptrend and check out the timestamp to see, okay, where do I need to skip to next? So the Lightning Network is essentially an answer to Bitcoin's blockchain being slow. Bitcoin works at around 7 transactions per second, and if we compare that to Visa works at around 10,000 transactions per second. So this is not scalable as a global peer-to-peer payment currency. If you're only doing 7 transactions per second, you're going to get a massive backlog of transactions, and paying for your coffee at Starbucks is going to take potentially years. And if you want to try to get it faster, it's going to cost you a whole lot of fees. So there's been solutions suggested to improve how many transactions per second Bitcoin can do. Bitcoin Cash, spearheaded by Roger Ver, suggests let's make the block sizes larger. And this, in theory, definitely works. However, there's a lot of pushback from the cryptocurrency community to larger block sizes. And the reason there's this pushback is that the larger the block size, essentially the harder it is to mine, to simplify it. And so what it does is it weights in favor for the big mining pools, because they're going to be the ones who have the greater likelihood of mining that block. So it creates a larger centralization around the consensus, the solving of transactions of Bitcoin. So 2 sides to this equation. Side 1 is, okay, so big block sizes create centralization, but it makes the network run faster. And so this is the conversation or debate that's going back and forth is, well, what is Bitcoin really? Is it about being a peer-to-peer cash, peer-to-peer digital cash, which is what's written in Satoshi's white paper? Or is it about decentralization, which is also mentioned in the white paper? And it's all a subjective balance on where do you put yourself. And so people who value an immediacy to being a peer-to-peer cash system, well, Bitcoin Cash may be a superior alternative for them. However, there are solutions like the Lightning Network that are now coming in, and these solutions allow for faster or more transactions per second, less expensive transactions without compromising its how it's being mined. So with the Lightning Network, we don't need, or we're not dependent, or it's not weighted towards these big mining corporations or factories that just have warehouses full of miners. It's still possible for the little guy to kind of get involved in the mining and consensus mechanism of Bitcoin. And so this is really attractive for the decentralization aspect of it. So how Lightning Network works is essentially it's a layer 2 solution. So you can think of the Bitcoin blockchain running along the bottom here, and it is still running, 10-minute block time, 7 transactions per second, just chugging away, slow and steady block sizes, steady block times. What the Lightning Network is it's a network above the blockchain. And so let's say myself and 3 others, we all kind of put a pool of funds off the blockchain. So the blockchain appends this pool of funds, and now we all transact with each other. And to oversimplify it, once we're done transacting with each other, we then append that back to the blockchain. So let's say 100, 1,000, 10,000 transactions happen on this second layer, and then we just reintegrate with the blockchain using only 1 transaction. So if it wasn't for the Lightning Network, all of those, let's say 10,000 transactions would be on the main chain, obviously clogging the network up massively. With Lightning Network, we're able to create a little bit of space and a little divide so people can interact and exchange funds and then append that to the main chain. Of course, for the technical people out there, this is not the full in-depth explanation, but this is an oversimplified version. So if you want to learn more about the Lightning Network, I highly suggest you do so, because really this is something that's going to propel the scalability of Bitcoin and its viability as a peer-to-peer cash payment system. So definitely check that out into the Lightning Network. So with that being said, we talked about tippin, which is using the Lightning Network to tip. Jack Dorsey tweeted about it. He opened up his own account. He's received some tips. And something else that's come in on the Lightning Network not as of recent, but has really exploded into the mainstream as of recent, is the Lightning Torch. So the Lightning Torch was created by username HODLNOT on Twitter. And so how this all started is he started a torch by sending, or the torch, by sending 100,000 Satoshis to a user, to somebody else. That user then added, so, and 100,000 Satoshis is around, $3.40, depending on the price of Bitcoin at the time. The next user that he sent it to adds 10,000 Satoshis. Now the total is 110. User 2 sends 110,000 Satoshis to user 3, who then adds 10,000 Satoshis. User 3 sends 120,000 Satoshis to user 4, so on and so forth. And so the lightning torch has been passed around to literally hundreds of people now. And this week, Fidelity, an institution which has over $7 trillion under asset management, took the lightning torch. And so this is the first institution to take the lightning torch. And it's iconic that Fidelity was the first institution to take the torch, as coming up in the near-term future, Fidelity is launching to their $7 trillion assets under management crypto custody solution. So there's going to be, I believe, they have 2.4 million people on Fidelity. You'll have to fact check me on that number, but they are now going to be able to store their funds in the form of cryptocurrency using the Fidelity crypto custody solution. So this is a real explosion of people being able to start diversifying portfolios, 401ks, whatever it may be, into cryptocurrency. So this is Fidelity is bringing a massively bullish sentiment into this space, and their continued participation in cryptocurrency is, we talked about at the beginning, fundamental analysis. This is massive for fundamental analysis. The adoption of cryptocurrency is getting incredibly strong right now, and it is really exciting times. So next up, my Ether wallet is now allowing for KYC-free fiat withdrawals. So what this means, KYC, you have to, if you've ever been on a crypto exchange, generally they make you upload your ID, your photo, your birth certificate, like whatever, your fingerprint, your blood, your firstborn child's thumbnail. Like, it's crazy. A lot of this is for tax implication reasons and anti-money laundering and all these kinds of things. But a lot of people see this as an infringement of privacy, and they want to be able to transact cryptocurrency privately without people kind of having a look into this. Cryptocurrency is a system that is kind of designed to work outside the current one. We are seeing a lot of integration, obviously, with Fidelity and NASDAQ coming on and ETFs and all these. There is a lot of overlap happening because there is a lot of money floating around, a lot of money to be made. And obviously these big players, big institutions, they're looking to make profit. They're looking to continue to innovate as that's necessary to keep a business relevant and profitable. So we're seeing a lot of integration, but to bring it home back to the point is people still want to be private. They don't want people sniffing around in what they withdrew, what happened. And so my Ether wallet is now allowing people to withdraw up to $5,000 KYC free. And they're doing this because they have partnered with a third-party partner called Biddy. And Biddy is based in Switzerland. Switzerland, much more lenient on banking laws. And so this has worked out very well for my Ether wallet. So that's that. Next up, and I believe finally before the price action talk, is the Binance decentralized exchange. It is live in testing mode now. So there's two parts to this conversation. The first one is the Binance DEX, which is super exciting. And then the second part is the drama or kind of cluster that's happened on crypto Twitter and YouTube in the last little while in regards to the ways Binance has gone about with, you could say, R&D, research and development, for their decentralized exchange. So we'll get into that after the first part here. So what is a decentralized exchange for those of us who don't know? A decentralized exchange is obviously the counterpart to a centralized exchange. So centralized exchange, Quadriga founder, he dies, the whole system goes down. If there's a hack, the system goes down. It's very much like, let's say it's a bank or a corporation. There's just, a small server base. There's a limited amount of people who hold the control and the power. So a decentralized exchange is the complete opposite. It's supported by a network of nodes, a network of users. Anybody can decide that, hey, you know what, I want to run a node, I want to be a validator for this, I want to add to the security, I want to be a part of this, and this can happen. Another big difference is centralized exchanges charge a lot of fees. They're for-profit companies. Decentralized exchanges generally are just interacting with the blockchain itself and charge much less fees, as there's a lot less overhead. Centralized exchanges, you need to have, servers and mainframes and a lot more of a business structure set up. Decentralized exchanges can be a lot more lightweight, as the servers themselves are the people or nodes who are using it and running. So you're able to kind of delegate out a lot of your overhead expenses. And so when you can delegate out your expenses, well, now great, your costs can get lowered so that you can still run a profitable business and not get sunk down by expenses. So the Binance decentralized exchange, though, is a little bit different. It's more so of a hybrid between decentralization and centralization. And this is because it's running on Binance chain. And the way that Binance chain works right now is it is not open consensus. So if you want to be a validator node, which would be similar to like mining on the Bitcoin blockchain, you cannot be a validator node right now. You can only be a witness node. So what a witness node means that you can see what's happening and you can report, fraudulent activity or anything that looks suspicious, but you actually can't do anything to change it. So Binance says in the future that they will allow users to set up their own validator nodes. However, this has not happened yet. So right now it is still very much a hybrid decentralized centralized exchange. So it's in, like I say, it's in the testnet right now. So it's all fake tokens. They're just working out the kinks on the website. So to get into potentially the juice, the drama of the Binance decentralized exchange, what happened? Here we go. Let's dive in. So Blocknet. Blocknet is building a decentralized exchange as well. However, they wanted to get listed on Binance. Who doesn't want to get listed on Binance? It is currently the monolithic, #1 by a long shot cryptocurrency exchange of the world. You get listed on Binance, that's a gold stamp of approval. Your liquidity is going through the roof. Your community incredibly happy about that. So it's something that you really, as any project, you want to get listed on Binance. Bottom line, kind of like you will do anything to get listed on Binance. So Blocknet submitted a form to Binance to get listed on the exchange. The first form, really standard, really typical. What is your token address? What blockchain are you running on? You're like, give us some information. So they submitted that. Binance then replied with, I believe it's around a 30-page questionnaire of questions that are so incredibly in-depth and specific to Blocknet and the challenges that Binance themselves were likely facing in building their own decentralized exchange. They were asking questions on how to solve numerous problems. I'll post the questions on here. I don't have them on me right now, but I'll post them on the screen here on what kind of questions Blocknet was being asked by Binance. They're incredibly in-depth, incredibly over the top, and a lot of people say Binance was just doing good due diligence. You want to do due diligence on any project that's listing on your exchange. Sure. On this questionnaire, there were 4 contributors. 4 different people from Binance were contributing to the question. So it wasn't just, for example, if this was any run-of-the-mill project, do you think there would really be 4 contributors to the questions? Not a chance. Not in my opinion, at the very least. And so they were really digging into all the questions that they needed to get answered, in my opinion, to see, okay, what questions do we have about, how to implement and make sure that our decentralized exchange works well and, overcome a few hurdles and obstacles. And we'll just ask Blocknet, how are you guys doing it? And people say, it's up to Blocknet to decide if they want to reveal that information or not. And this is true. However, Binance is in a massive position of power where Blocknet is kind of at their whim. They just want to get listed on Binance. We'll do anything, CZ, anything. Just tell us what to do. Okay, well, here, answer this questionnaire. It's a little over the top, but just answer this and you'll get listed. He didn't make that promise. Don't quote me on that. But that's, their hope, obviously. So they fill out the questionnaire. They answered it incredibly in-depth. And as soon as they sent back the questionnaire, contacts were totally closed with Blocknet. So they did not reply to their email. They certainly didn't list them, but they just totally cut off all contact with Blocknet. And so, a lot of people say, or, of course, businesses want to be profitable. That makes sense. You have to outwit, outplay, outsmart. I think that's like a Survivor quote. Your other businesses. I get that. But I feel like by Binance using their position of power to essentially leverage and, maybe no, extort is maybe a little too strong of a word, but it's certainly around that energy from BlockNet information about how they are solving problems so that they could, outpace. So Binance could outpace BlockNet. That's the whole idea. Binance is trying to outpace BlockNet. So they ask them questions so that they could get things answered for themselves, do a little digging on their competition, see where they're at, and then propel themselves forward. Kudos to Binance. Great business move. Is it ethical? And I think that's totally up for debate. And I think a lot of people have a lot of opinions on this. And so just voicing mine right now, or at least the facts. So that is what happened with the Binance and BlockNet thing. So this kind of brings up the question, I think Binance was really painted in an angelic light before, CZ is amazing, doing all these incredible things. And I think now this kind of put not a big step back on Binance, but I feel like it certainly put a stain on the reputation in my books. So that's that. All right, now, so diving into price action, this last week has been absolutely crazy. We've seen so much flatlining in Bitcoin over the last little while. And just to see, a 2% pump, people are making memes of coins going on roller coasters like this is the most volatile thing we've seen in a long time. And so Bitcoin rose from 3,600 to 4,200, and there was a full change in sentiment in the community. People at 3,600 were calling, we're going to 24, we're going to even like below like 1,600 per Bitcoin. Everyone was incredibly bearish, and then we pumped up to 42, and the sentiment totally changed. It was a full-flown bull party. The matadors were out with their capes, the bull's horns were out. This poll was interesting for sure. So Shilnai, Michael, what's his last name? I can't remember. On Twitter anyways, Shilnai on Twitter. He put a vote and he said, where do you think Bitcoin is going next? $5,000 or $3,000? So it was around 19, oh hold on. Right, so there were about 1,600 voters that made a choice between the two. Some people just said, show me the results. But of those 1,600, 1,100 said, it's going to 5,000. 500 said, it's going to 3,000. And so there were double the amount of people who were calling for 5,000 over 3,000 when before the sentiment was not even close to that. Double, are you kidding me? People were calling, screaming from the rooftop, we're dropping. And so it's just comical how such a short-term volatility in price action can drastically change the sentiment. And I think this attests to how careful we have to be and how we have to take everything that's being said out there with a huge grain of salt, because everybody, or the majority of people at least, are just running on emotions that are very fleeting and temporary. And everyone's riding the hype train up, down, up, down. It goes up 10%, bull market, goes down 10%, bear market. And it's just absolutely nuts to think that that's how things work. We need to be able to zoom out and see the big picture. Crowd mentality is easily swayed. Obviously, after we had that rise up to 4,200, we flash crashed right back down to around 3,700, 3,750. And everyone's screaming, manipulation, manipulation. And as I mentioned earlier, no one was screaming manipulation on the way up. So again, just hilarious mentality. And you really have to just become seasoned investor here, or at least develop or implement a strategy, a trading strategy that you're going to stick to. Because if you're going with the crowd, you're going to get wrecked. We had a poll for about 20 weeks in the cryptocurrency investing Facebook group of around 130,000 members. And this poll was, okay, so we're going to choose, if I remember correctly, 5 coins every week. And we are going to allocate our portfolio into these 5 coins. And, let's say we started with $10,000, then let's say 1 week it goes to 11, then we vote for a new 5 coins. Well, then we allocate directly into that now $11,000. So we just refresh the portfolio every week. Anyways, so this was an experiment to see, how smart is crowd mentality really? We have a tight-knit cryptocurrency investing group who I feel is fairly intelligent and well versed in the cryptocurrency space and happenings. Let's see what happens. Can we outplay? The big idea was to outplay the index coin Crypto 20, which is just following the big players. Can the crowd outsmart just an index fund? Warren Buffett mentality. Warren Buffett index fund. Let's do it. And so long story short, hell no. Tron would pump 10%, 20% in the week. And so this week would happen, and then he would say, okay, so now we're voting. We're voting. Which coin should we buy? Buy Tron, buy Tron. And so we'd buy Tron, and Tron would consolidate down 10%, and something else, Ethereum would pump 10. And then the next week, buy Ethereum. We got crushed. It was in full bull market time, so it looked like we were the smartest cats on the block. But we got crushed because everyone is chasing the trend. And everybody looks like a genius when it's a bull market. And oh my God, it was atrocious. But I'm super happy that we did that because it was a great testament to show the power and just herd mentality that traders have and the emotional, fluctuations that people are undergoing that influence their investment decisions. And so this is really telling. Is that experiment, that 20-week experiment, to me is very indicative of what was happening here with the price action where, Bitcoin rises 36 to 42. Bull market, flash crashes. Bear market, and then everyone starts coming out, I told you so, I told you so. And literally, as we were on the way up, I didn't see anybody on the I told you so train. And as soon as it crashed, people were saying, oh, the order books were so thin, I called this, and I didn't hear it once. And luckily, now that I'm in Bali and I have a lot of time on my hands, I get to do crypto all day long, literally. Obviously I work out and have fun and sports and that kind of thing, but crypto is my thing. At least 8 hours a day. Nobody was calling this, or if anybody was, it was much less than 10% of the population. And as soon as the flash crash happened, it was less than 10% of the population that was calling for a bull market. So, if you did call it and I didn't see it, kudos to you. Post it in the comments below. I'd love to follow you and create a little spreadsheet. What I have is a spreadsheet of traders that I follow and their calls. And I like to see what accuracy are they predicting their calls to. Obviously, it's not always like this is going to happen 100% or this is going to happen, but they'd say this will probably happen, or I'm setting a long here, or I'm setting a short here. Anytime they give an indicator, I put a marker on this spreadsheet. Anyways, so I've been following a lot of traders over the past few years, and I have yet to find one trader who's over 50%. I've yet to find one. So if you feel like you're a trader who's over 50%, let me know. I'd love to follow you. I'd love to do a little due diligence. And maybe within the next 2 months, 3 months, we can all carry you around on our shoulders saying you're the best trader in the world, because I have yet to find one. So that being said, be diligent in your investment strategy. I think listening to others should always be taken with a grain of salt. And the only thing that should really, in my opinion, be taken into account is the long-term fundamental analysis. What is happening with Bitcoin? What's happening with Ethereum? And slowly, just readjust your portfolio accordingly. For example, Ethereum Constantinople, it's having a hell of a tough time getting it out there. And in my opinion, if this next one doesn't go through, I'm going to be reallocating some of my portfolio from Ethereum into other smart contract platforms because my faith in Ethereum will dwindle. That being said, they had a month to fix one flaw, a critical flaw, but fundamental analysis I think is just so crucial. That being said, Dez here, Dez is one of my good buddies, and he's a trader at Grok Trade, and he posted a chart, and I redid the chart, he had a lot of other indicators on it. So here's the chart, and this is, for me, if I'm going to do technical analysis, the simpler the better. So if you're listening on the podcast right now, we have a long-term resistance line starting November 16th, and then it drops all the way down. We topped out around December 17th, then right around, looks like January 2nd or so. And this top resistance line coincides perfectly with the support level of 3750, 3700 that we bounced off. So this is a really, what I'm saying is this is a really crucial resistance level, something that I think anyone can agree to, is that support and resistance levels are 100% real and something to be watched. Technical analysis, a lot of people watch Fibonacci retracements and Elliott wave theories, but I think what's 100% true is that the simplest of TA is the most effective and predictable, because it's the one that the majority is watching. So when you just see, horizontal support lines, horizontal resistance lines, those are the ones that are valid to be watching. Or when you have these big triangular wedges, that's when you want to watch for the breakout to the upside or the downside, because everybody's watching them. Who knows Elliott wave theory? Definitely a good amount of people, but certainly not the majority. But the majority of traders certainly know support, resistance, wedges, these kinds of things. So that's great TA to watch to keep it super, super simple. Moving on here on the TA, we have essentially a channel created from dating back, mid-January, early February, just a slow rise in Bitcoin price action. And again, if you're listening on the podcast, I'd suggest jumping over to uptrend.com. Check out this link, search my name, Jeff Kurdakis, and you'll be able to find this chart. Again, thanks to Des for pointing this out. And so there's just this nice, slow upward channel on the daily chart moving. And it also perfectly coincides with the resistance level of the 3,750. And so this is essentially the big ethos of what I'm saying here is watch that level, 3,750. If we break through that, no technical analysis expert here, but as people say, technical analysis is just making projections and percentages, let's say. And so I would say if we break through 3,750 USD per Bitcoin to the downside, we are going to see a much more drastic consolidation going lower. So that is my view on what's going to be happening here in the crypto space in terms of technical analysis. So to make a blanket statement, I do believe that we have definitely seen the bottom price. I also believe that we have a slow yet erratic and volatile climb ahead, full of volatility, manipulation, profit taking, all the good stuff. With that being said, our ceiling is so much higher than $20,000 per Bitcoin now. If you've been keeping up with the week in review videos or just even staying lightly engaged with what's happening in crypto, Fidelity, NASDAQ, ETFs, Lightning Network, Ethereum upgrades, there has been so much improvement onto our networks that the ceiling is exponentially higher than $20,000 per Bitcoin right now. So it's just a fantastic play, or like we say, everything is in percentages. I think the percentage chance that we go above 20K on the next full-on bull run is incredibly strong. And looking at market cycles, everything works in cycles. When we look at ocean tides, when we look at the S&P 500, when we look at daylight, nighttime, whatever, everything is cycles, and the crypto market is no different whatsoever. So we, on February 1st, entered the longest bear market that Bitcoin has ever seen. And that's wild to me, because we have been growing so much in terms of our fundamental analysis, in terms of the value of the network, of the cryptocurrency space as a whole, and we're still bearish. To me, it feels like we are ready for this massive spring upwards. That's what it feels like in my heart, but in my brain, I know it's gonna, people take profits. We do have big money in, skimming 10%, 5% every chance they get. Traders are out here in full force, so it's not like we're just going to shoot to 60K right away. That would be a foolish thought to think. But I feel like we are being held down 100% in our potential and what the network is really worth. A lot of coins right now, I believe, are mining at a loss, or at least close to. I would not be surprised if Ethereum was mining at a loss and if Bitcoin was dangerously close. That being said, mining difficulties can be adjusted, yada yada. So to kind of back up a little bit, what caused this pump on the short term here? And there's three things that I can tangibly see that caused the pump. The first one was something I touched on at the start of the episode, which is the weekly MACD indicator. It was looking extremely bullish. It had the most velocity moving to the upside since, back in October 2016. And so once that crossed, it was just kind of like, once you break a resistance level, it's like, boom, off we go, up to the top. And this break on the MACD actually perfectly coincided with a trader placing a 80,000 Bitcoin long on the futures. This is crazy. What does this equate to in millions? I'm not going to do the math right now. It doesn't matter. 80,000 Bitcoin long. And so this was the biggest long ever placed on futures in history. And so this was a huge catalyst, coinciding with the MACD to really get some legs and keep going up. Additionally, alongside this, on the fundamental analysis side, Ethereum is about to undergo a network upgrade, and that's expected on February 28th. So that's coming very quickly. This is going to be the Constantinople upgrade, and this is going to make Ethereum I'm going to oversimplify once again, make Ethereum transactions go faster and cheaper, more transactions per second. Not necessarily faster transactions, just more per second. And it's also going to do something that I feel is very crucial and an important thing to look at when we're looking at the ecosystem of price in cryptocurrency. It's going to change the block rewards. So every time from 3 Ether to 2 Ether. So every time a miner mines a block, they're rewarded 3 Ether. Again, oversimplification. Now they're only going to get 2. So what this has done is decrease the supply entering the ecosystem. So if demand stays the same, but supply has decreased, well, naturally that causes a price increase. And we're going to continue to see this decline over time as well. So this is just called the thirdening. This is the first step in reducing the block rewards for miners. And so through reducing supply, essentially you are increasing the inherent demand just based on their relationship between the two. So those are my thoughts on this week in crypto. It's been a wild week, as always. If you feel like I missed something, throw it down in the comments below. Would love to hear your thoughts. If I said anything that you disagree with or that you want to have a debate about, I'd love that. My whole thing is having open conversation. I feel that differences in opinions are what make are incredibly rich. Let's just say that, because herd mentality, I feel, is the virus of it all. If we all just have this big confirmation bias one way or another, how will we ever learn? How will we ever grow? How will we ever challenge our perspectives to become better informed, better traders, wiser? So if you have a difference of opinion from something that I've mentioned in this video, please let it be known below, and let's have a conversation about it. There's always multiple angles, multiple perspectives to every story, and they're all 100% valid. I think what's super important is that no perspective is incorrect, but it's only a perspective, and that's it. And so again, please let me know in the comments. And also, if you want to throw in the price prediction for Bitcoin for next week, Sunday, 1 a.m. UTC time, throw that in the comments below. You'll be eligible to win $250 worth of 1UP uptrend tokens. And once again, I want to give a huge shout out to Sasha and the guys at Big Crypto Podcast, including Clady, who graciously lent me this studio to work in. New microphone, love it. I hope you guys enjoy the stream. I put a little bit extra work into this one, and I hope you guys have a great week. I hope we stay within that channel, keep rising. Let's watch those 3,700 numbers. And most importantly of all, let's keep the adoption rolling, keep the positivity going, be nice to each other, and see you next week.